Okay, so you're welcome to another edition of the SME Digest Business Show on Vanguard Live. And as you always know, on Tuesdays on Vanguard, it's the business show where we get to discuss about business and how you can, take your business to the next level, how you can grow your business, and the tips that you need to take that business to a greater height. We're bringing in experts and different personnel that will give you that guide and insight on how you can grow your business. Okay, stay tuned. Today we have great people on the show, as you can see, but I'll get to introduce my guest when I come back from this break. My name is Abe Oyetunji. Stay tuned. Okay, welcome back. You're on the SME Digest Business Show on Vanguard Live. Okay, so today we're going to be talking about a very, very crucial and interesting topic as it matters to businesses out there. So today we're talking about why SMEs are not getting their loans approved. As a matter of fact, in SME Digest, smedigest.com.ng, we get a couple of mails on a daily basis of people asking for funds and people complaining about not being able to access business funds. So we looked at it. What would the problem be? So we decided to bring about this topic and bring in those that are sitting behind these funds to come talk to you about why you are not getting this loan approved. So with me in the studio, I have Stella from Keystone Bank, the MSME product manager of Keystone Bank. And welcome, Stella.
Good morning. Thank you.
Yeah, good morning. You're welcome. And we have Emeka Anaeto, the business editor of Vanguard. You're welcome.
Yes, thank you, Abe. Thank you for having me here.
Okay, great.
Vanguard Live.
So we kickstart the show proper. So why are SMEs not having their loans approved? Yeah, let me take the question to Stella. You see, so many SMEs out there are complaining about them not getting access to funds. Most of them not getting access, complaining that their businesses are not getting their loan approved. So what are these reasons that is causing these challenges for SMEs out there?
Okay, thank you, Mr. Abe.
You're welcome.
Okay, so I'll start by saying that I think that one of the issues, the fact that a lot of SMEs are not able to really identify the different phases and stages of their business, right?
Okay.
So funding for a startup is completely different from funding for a small business that is in the growing phase and a business that is in the matured phase. Now, for businesses that are at the startup phase, okay, I mean, the bank would not be, the place to go to.
Okay.
So you need to know what phase your business is in and who to go to for funding. Now, if your business is at the startup phase, then it's advisable that you do what is called bootstrapping. So meaning that you need to look inward, because a lot of times at that phase, you don't source for external fund. It's a learning phase, okay? So you want to begin to look at your own resources, monies that you can, gather personally, or maybe you want to look at friends and family, or maybe you want to look at other channels. Maybe instead of, you don't have enough money to buy an asset, maybe you're into cinematography, you don't have money to buy the cameras and all of that. You can rent it, right? You might have the monies to rent. But the most important thing is that you need to, just kickstart that business and then begin to study how your business, how is it moving? For example, how do customers respond? Do they like what you're offering them? How many customers do you have? What kind of customers? What's the seasonality? Those are things that you need to understand. So you don't come to a bank at that learning phase of your business. It's very unlikely. However, if you get to the growing phase, yes, you can come to the bank, because one of the things that the bank will be looking at is the history. So maybe in the last 1 year, how has your business performed, right? It gives them some comfort and some level of, some level of comfort or confidence to say that, okay, this business, we see potential here. This business is viable and we see a future here. Now, the way banks lend to businesses in the growing phase, a lot of them, they call it SME lending or SME finance, right? At that phase, we understand that businesses don't have proper collateral. So a lot of times we explore options of flexible collateral options. We look at stock hypothecation, we look at, so for asset financing, we can just look at the asset that you're purchasing as the collateral. We can look at, maybe you have your personal car, right? Even though it's not in the name of the business, we might say, okay, bring that, let's accept, that personal car as some form of collateral. Or maybe you have a laptop or some other asset. That's where the option of the National Collateral Registry comes in. We will request that you register these assets with the National Collateral Registry. Then, of course, you then begin to look at a business that is in the matured phase. Now, financing for businesses at the matured phase, that's when you begin to look at proper structured financing.
Okay.
Now, let me just quickly mention that for businesses at the startup,
Yeah.
now, for those that are leveraging technology, we call them innovative tech startups.
Startups, yeah.
Right? There are opportunities for them to begin to engage with venture capitalists, angel investors. A lot of times they are interested because they have the potential to scale, right? Then for businesses at the growing phase, we begin to look at maybe amounts like maybe maximum of 20 million. But for a business that's coming to the bank for 50 million, 100 million, that's more like matured financing. You're not expecting the bank to just accept just any flexible collateral. They would ask you for legal mortgage, more structured collateral. So it's expected as your business is growing and entering that phase, it's expected that you should know that I need to begin to acquire proper, tangible asset for the business, because someday I'm going to approach the bank and they're going to ask me for these kinds of, collateral.
Okay, great. Nice one there. So, in summary of what you just said now, you don't businesses that are in the startup phase, like they're just starting out, there is no point for them going to the bank to access funds, to access loans. So you have to be a business that have gotten some traction and some customer base. Okay, that's great. And Mr. you want to say something?
Yes. When Stella was giving the 3-stage of businesses growth or development, she mentioned startup, then to growth. Do you have time? What governs transition from
startups to the
growth?
Growing phase?
Is it how many years it's been in operation, or how much capital that's at play in the business, or turnover rates? How do people determine that this is just a startup, this is just a growth, before you even talk about maturity?
Okay, so for businesses that are usually in the startup phase, businesses that are doing less than 1 year, usually we'll just categorize them as in the startup phase. Then also we also look at what's their revenue like. So if it's still in trickles, there's no consistency. Maybe month 1 you make 500,000. By the next 3 months there's nothing, right? So it's still in that startup phase. But when there's some level of consistency and some level of, you see a trend like traction that it's gradually beginning to grow, then it only makes sense for you to, you've done that in 1 year, you can see consistency, then definitely you can approach the bank to begin to talk about financing.
Okay, awesome. You made mention of collateral. This has been a very, very huge setback for SMEs that are trying to access funds. So now, talking about business in the growing phase out there, we have so many businesses out there that are in the growing phase based on how you've explained it. Now, do these businesses need this collateral to access this fund? And if they do, what kind of collateral do they need?
Okay, so for businesses in the growing phase, usually banks have an understanding that, okay, a lot of them don't have proper collateral. So we usually explore what we call flexible collateral options. And thankfully, the government has established what is called a National Collateral Registry. So for example, you have like a laptop, right, your personal laptop, right? So we'll say, okay, you know what, register with the National Collateral Registry, because that gives the bank some kind of leeway or lien on that asset, okay, so that if for any reason there's defaults on that loan, right, the bank can say, okay, this asset that was registered with National Collateral Registry in the bank's, in the interest of the bank, yes, the bank can lay a claim on it, right? Now, so those are, then we have options of stock hypothecation, we have options of, floating debenture and all of that. So there are, or we can look at instances where we say, okay, present posited checks, right? So those are some sort of flexible options. But of course, beyond that, we also look at character. We look at, okay, I mean, what's the capacity of this business? We want to see that there's cash flow. We want to see that, I mean, you have the, I mean, there's a tendency in you that once the money is in your business, you won't divert the funds to some other venture, right? So those are things that, so it takes the bank, so the bank has to do some extra work beyond just your collateral now, right? We are also looking at some other, would I call them softs, some other measures that are not necessarily tangible collateral that will determine that, okay, this person has the capacity to pay back this loan.
Okay, awesome. So we've been discussing with Stella from Keystone Bank, the MSME product manager. Okay, so in case you're just joining us, we're talking about why SMEs are not getting their loans approved, and we've been seeing a whole lot of reasons. Okay, so Stella, Keystone Bank, can SMEs apply to get loan at Keystone Bank right
definitely.
now? And
Certainly.
you are very sure they are going to access these funds?
Yes,
once they have all their documents and everything you ask for?
As long as they meet our criteria, our RAC, right, yes.
Okay,
they are in the startup phase, and I mean, they show that they meet all of the, they have the capacity, they have the, what's it called,
the
the business is viable. I mean, all of the basic things that you don't have some bad credit history somewhere. You don't have one loan that is not performing somewhere. I mean, why not?
Okay, so you hear that from the horse's mouth. You can actually go to Keystone Bank and access your funds, access loans. So much you have, so much you're not a startup, and you have traction, and you know all of that. Okay, so Keystone Bank is actually having a program called the KSA. Keystone Startup Advantage. Okay, and I see this as an opportunity for businesses out there, for startups out there. So that's part of the reason I brought Stella on here today to talk to you about it. So tell us, what is KSA?
Okay, so the Keystone Startup Advantage program, I would say that it's a unique or an initiative that is not very common amongst banks. So we had talked about, you know, financing or funding for startups and the fact that banks don't lend to startups. So we might not be able to outrightly lend to startups, but we see that as a window. We see this platform, the Keystone Startup Advantage program, as a platform or an avenue to still avail funding to startups. So what we do in this program, first of all, we've been able to, I mean, we received a lot of applications. We opened applications. We received a lot of applications. Now, out of the number of applications that we received, we selected 30. Now, one of the criteria was, one, it has to be innovative. It has to be technology driven. So we have to see that it's viable, right? And then we have to see that it has gone beyond just an idea. Right.
It has gone beyond the ideation stage.
Yes, exactly. At least there's some kind of traction that shows that 1, 2, 3 customers are even interested in this thing. So for us, that's, you know, that's some kind of indication that, okay, there's potential. Now, we're then going to take them through a 3-4 months, a 16 weeks incubator program where they begin to learn about how they can successfully run and scale this business, right, into a full-fledged business. And then after that, they're then going to have an opportunity to present to investors. So we're going to connect them with investors at a demo day session. And then we're going to select 3 of them that we're going to avail 3 million naira each. Yes, as grants. Yes, so that's our way to say, okay, we have the traditional SME lending for those that we look at that in growth phase. But however, we also have this opportunity for those that are in the startup phase.
Okay, so you heard that right. So you're in the startup phase of your business, and especially technology business, right? Technology startup, innovative business, and you've gone past the ideation stage where you are, at least you have some customers, you want to join the KSA program. Okay, so this is the first batch, right?
Yes.
The first batch registration and everything has ended.
Yes.
So we're expecting the next batch sometime later.
Yes,
Okay, so you have the opportunity to get 3 million naira. You heard that right? 3 million naira. So you don't want to miss that. And you're also going to get access to investors that will invest in your business and all of that. Okay, so is there a website where people can actually access more of this information and all that?
It's available on the Keystone Bank website.
Okay, go to just Google Keystone Bank and you're going to get the website. When you get there, just check out for the KSA program out there. So in case you're not in this first batch of the KSA program, you want to wait for the next batch, which is going to be coming up very soon. Just stay tuned on the SME Digest platform and all of that to get
Let me just quickly
updated.
add. So let me just
Okay.
quickly add as well that because this was the first cohort, so we opened it up to those who are not even our customers.
Oh,
However,
beautiful.
for subsequent cohorts, we expect that now that you know about it, we expect that you go and open your bank account with the bank right now. So
Okay.
find out what account is tailored for startups, because we have a flagship account for startups. Open that account, begin to run your business, right? So that when you apply, you won't be an what's it called now, a non-customer of the bank.
Okay, so you
Right.
give priority to Keystone customers.
Yes,
Okay,
that's
so you get that right. You want to take the advantage of that and go and open a Keystone account so that you can be part of people that will be selected. Okay, so any other words that you have for SME startups out there?
Yeah, I would say that I think just take time out to really understand your business,
Okay.
right? Know what phase your business is in, because once you understand that, then you know who to go to for funding. And then also, some of the things that banks also look out for, which a lot of small businesses miss out on, is proper banking. So separate your personal accounts from your business
business
account.
accounts.
Have a dedicated business account for your business. Now, after having that account, route all your business transactions through that account. You want to pay your suppliers, do it through your bank account. Your customers want to pay you, do it through your bank account. It makes it easy when the funder, the financier, because even an investor, it makes it
Yes.
easy for them to just have a glance at all of your banking
And
transactions.
see what you're doing.
Keep records, okay? Have proper cash flow management. I mean, doing all of this, at the end of the day, it just tells how dedicated you are to that business. And I don't see any reason why any financier wouldn't give you funds.
So if you're not getting funds out there, it's probably your fault. So if you have all this in check, you have proper record. Last week we discussed about an inventory system that helps you keep good records of your business and all of that. So you want to go back and check out the show. So have a good records, have all of that, just as she has mentioned, and you definitely will have access to this funding out there. So, Mr. Emeka, anything from you?
Well, a lot we could have tried to find out on KSA. For example, she said 30 in the first cohort,
Yeah.
done and dusted,
Yes.
and then when the next is coming up, it's not yet. You have idea when?
Okay, so we don't have a specific date
Date,
here, but
okay.
we're looking at maybe like Q4 this year.
Okay.
So and then it will start by
Okay.
2023.
Now, is it just first come first registered, as in the
No.
first started, or you have a criteria for onboarding? You have just said you must be
Keystone
say,
Bank priority.
Yeah.
Okay, that's the second
Customer.
cohort. It must be a customer,
Yes, yes.
so they
Customer
can
bank.
just go and open an account now. It doesn't matter how long the account has
No,
stayed.
as long as you have
Then-
an account with us.
Then you must be a tech-driven,
Yes,
tech-driven
the startup.
business, yes.
driven business. I'm just trying to look for that thing that we cut off a lot of people. It's not. I have not seen it, because this criteria you mentioned, you can still have 100, 500 people registered. How are you
Yes.
now going to pick?
So the startup
So-
has to
or
be.
must it be always be 30? Can you move it up to 1,500?
Who knows? Let's see how. Let's see how the first
Okay.
cohort goes. Let's see how investors respond. So, I believe that would, to some extent, determine, what the subsequent cohorts will look like.
Okay. Now, you just mentioned it. How investors would respond? Are you talking about angel investors?
Yes,
Venture
I mean,
capital
yes,
investors?
yes.
Now, there are issues around that for us
Okay.
Nigerians. You are bringing investors to come and take over my business. How do you handle that?
So yes, I hear that a lot, and I know that. I think it's just it's a conditioning, right? It's a
Yes.
mindset
That's
thing.
how we
Yes,
Nigerians.
because
how-
the truth is, if you hold on to that business so firmly, it's going to remain small. But if you have a big, see, if you a lot of, now that's the reason why investors look out for tech-driven businesses, because they have the potential to scale.
To scale up
If your
so
business
fast.
is going to go around the world, trust me, you can't manage it.
Definitely.
You need collaborate. You need partners. You need people. So I think that we need to, just open up our minds. That look, think big when you're thinking of your business. If you're thinking of just being the director, founder, promoter, everything, just you, then trust me, your objective is a small business, right?
Definitely.
And it's fine. That's what you want. But if you want a big business, then trust me, right? you need to start thinking big. You need to start thinking investors, partners, collaborators, and what have you, okay? Thinking of a big team. So imagine you're in Nigeria, you have a team in China, you have a team in North Korea, you have a team in South Africa. You can't manage it all by yourself now. It's not possible.
Yeah, true.
So I think it's really about just the conditioning, really.
That's truly, yeah. So there are businesses out there. In fact, I was just reading this morning that some businesses, some startups raised about $2.2 billion, you know, just to expand their business and all of that. So it's very, very important. If you want to go big, you want to, you know, set your footprint on different parts of the world.
Yeah.
You need investor. You need these funds to actually grow. So it's very, very important. You need the investors are not going to take 100% of your business. Even I was discussing with a well-known angel investor, Tommy Davis. Okay, he even said any angel investor that wants to take more than 20% of your business, it's if you should run away from such investors. So those investors out there are not greedy.
Oh, okay.
Yeah, but let me just quickly add that for venture capitalists, they can be very ambitious. And
Yeah,
here's the
VCs.
thing. But the good thing about them is that they also bring technical support, right? Which an
Yes,
angel investor
exactly.
might not necessarily be
Yes.
bringing to the table. So a lot of times you see they bring in more funds. That's the venture capital. They bring in more funds. They also bring in technical know-how, right?
Yes.
Which a lot of founders, you are just starting a business.
Yeah.
You've not managed business all over the world, so you don't know what it's like. They are bringing that in. So they will likely be asking for more than 20%, right?
Okay.
So
Also,
Well, I don't know how much time you have, but I think you still need some more explaining to make out there for the new people that are coming.
getting set. Yes,
So if the criteria is set as we discussed here are just that, then probably you are likely to have a whole lot more than just 30. And then when you say 3 million for first 3, meaning that you are going to grade performance.
top 3, yes.
Yeah, top 3, meaning you are going to grade performance. Why in the code? So are there things like exams they will be taking
Yes.
to grade them
Yes.
to who will match the winner? They better know upfront how to get ready. But it's a
Definitely.
typical classroom.
Yes,
Then-
it is. Yes.
Okay,
it
so
is.
they are in the
So-
race for 3
exactly.
million.
3
So in the
million,
classroom, they will understand, what exactly
Okay,
they need
okay.
to.
The classroom
yeah,
will
exactly.
define all that. Then you just try for me if they get the 3. You say call it grants, meaning
grants,
Grants,
yes.
yes.
They are not paying back.
Oh,
Is
they're
it
not
grants?
Free
paying back.
money.
Oh wow! I'm coming.
Free
in.
money.
Alright, that's
Yeah.
good. I'm coming in. So then, anytime we have such offers, we do have what we call consolation prices. For first cohort
now.
is 30.
Yes, now.
Then first 3 out of the 30. What happens to the other 27?
They're going to meet investors.
They're going to be meeting investors
Oh.
and venture capitalists.
They're
So
all,
they have
so all 30 are going to be making present. They will pitch to investors,
Oh,
right?
wow, okay,
So they have
okay.
that opportunity. All of them.
Okay, you see,
Yes.
this aspect didn't come out. I thought they were just going to be receiving teachings and lectures, but this you are now saying that are going to pitch, present their
Yeah,
business
present.
and then get questions, and
Exactly.
then the whole thing they have in them will
Exactly.
now come out for
Exactly.
the investors to.
Exactly.
to
But
select.
is it not? It's possible from my own perspective that after the first 3, in fact, whether angel investor or venture capitalist may even choose somebody outside those 3.
So
No,
at that
definitely.
point in time, they're not
not focusing
there's
on
no
those
first
3,
3.
I think.
They are just
Yeah.
30 people.
Anybody can just
Yes,
be
exactly.
even
Exactly.
the person that scored number the last
The
person.
last
can be
person
the
can-
first.
Exactly.
Can
And
be
at
the
that
first from the
point,
investors.
there's no grading.
Okay.
At that point, there's no grading.
Okay, I
Yes.
get that. So the 3
So they all
million
have the
just from-
same opportunity.
Yeah, the 3 million just from Keystone.
Keystone.
Just from Keystone.
Okay, why the rest 27 are plus that
Yes.
3 people, yeah.
contest for venture
Exactly.
capitalism
And
investors.
investors. Definitely.
Exactly. So it's actually called an investor readiness program. So the
Yeah.
16 weeks is to help them prepare to meet
Wow.
investors.
Oh, that's good.
Yeah.
Awesome. Coming from Keystone Bank, I think this is the first from the banks out there.
Yes,
Right.
yes, yes.
Okay, that's nice. It's been a great day on the show today, and we talked about why businesses are not getting their loan approved. And we also moved on to talk about the KSA program from Keystone Bank. We had Stella and we have Mr. Emeka in the show today. Okay, so thank you for joining us today. So we'll come your way next week. It's the SME Digest Business Show, and I remain Abi Oyetunji. Thank you very much for staying tuned to listen next week.
Thank you.
Yeah.